So, good evening, everyone. My name is Akash Ghosh. I am from CF1, studying in PGDM Finance. So, today I am going to speak on rural and microfinance case studies. Uh, Important case studies in microfinance success, challenge, and reforms under the subject rural microfinance. In this presentation, we will discuss the real world case studies, including Grameen Bank, NABARD, Andhra Pradesh Microfinance Crisis, Women Entrepreneurship, and through microfinance, digital microfinance, and fintech. These case studies help us understand both the strength and the weakness of microfinance system and the reforms that shaped the sector. So let us begin with the Grameen Bank, founded by Muhammad Yunus in 1970s. Bangladesh faced severe rural poverty. Traditional banks refused to lend because poor people had no collateral. At the same time, money lenders were charging more than 100% interest in 19 So at the same time, moneylenders were charging more than 100% interest. In 1976, Muhammad Yunus conducted an experiment in Jowra village by giving small collateral-free loan to poor women. The success of this experiment led to the formal establishment of Grameen Bank in 1983. This marked the beginning of modern microfinance. So Grameen Bank introduced a unique lending model, collateral-free loan, joint liability group of 5 members, weekly repayments, 95% borrower were women. Doorstep banking instead of physical collateral, they used social collateral. Performance-wise, 95 to 98% repayment rate, where millions of borrowers model replicated globally. This provided that the poor people are credit worthy if the given the right system. So Grameen Bank succeeded because it used social collateral, reduced information asymmetry, aligned repayment schedule with income cycles, built trust through local presence. Initially, repayment was influenced by social pressure, but over time the model became economically viable. Grameen is considered a hybrid institution, both a social enterprise and a financially disciplined bank. Next, I would like to say that we have the SHG Bank Linkage Program launched by National Bank of Agriculture and Rural Development in 1992. It connects self-help group with formal banks. It is the world's largest microfinance program structure. Structure is that 10 to 20 members, mandatory saving of 50 to 200 per month, internal lending first, bank loan 4 to 10 times saving. This ensures discipline before credit expansion. Why shaving before credit? Build financial discipline. Group let group create a first loss buffer, reduce moral hazard. Peer monitoring is very strong in SHGs because members know each other personally. If one member defaults, the whole group loses access to the credit. This shift monitoring cost from bank to the group itself, making it efficient. So now let us discuss the Andhra Pradesh microfinance crisis of 2010. Between 2005 to 2010, MFIs expanded rapidly in Andhra Pradesh. Problem included multiple lending, over indebtedness, and aggressive recovery practices, political intervention. There were no proper exposure checks, high target pressure, and weak regulation. This led to large-scale default and industry collapse in the state. So was microfinance the problem? I think no. Paper implementation was the problem. Before the crisis, regulation was weak. After the crisis, regulation became excessive. Balanced regulation was missing, and reforms introduced by the Reserve Bank of India included NBFC MFI classification, interest rate caps, and credit bureau linkage. Income based loan limits. This made the sector more structured and transparent. Uh, Microfinance has helped women entrepreneurs. Like example, a rupees 25,000 tailoring loan can double income, improve children education, increase saving. However, sustainability depend on market demand, skill upgraded, reinvestment of profit, social media impact, and economic stability. Also, educational and healthcare, gender empowerment, graduation to formal banking. Now, coming to digital microfinance and fintech, there were opportunities like lower cost, faster disbursement, wider reach. Talking about risk, there is algorithmic bias over borrowing, lower digital literacy. Digital system cannot fully replace MFIs. The best approach is a hybrid model, like technology plus human relationship, speed plus trust. To conclude, microfinance has shown both success and failure. Grameen Bank showed innovation, like NABARD SHG model showed sustainability. Andhra Pradesh crisis showed the importance of regulation, and the digital finance show the future direction. The key lesson is that the microfinance works best when there is discipline, proper regulation, social media responsibility, and a balanced growth. That's all from me. Thank you.